Ladies and gentlemen, this half woman, half amazing, Rina Hicks, is your masterclass teacher. Give her a round of applause.
Thank you, Amani. Wow. Are we all staying? Yes. We are. Fantastic. It's so good to see all of you here. How was that? Julian Kula is just amazing. Wasn't he just the best thing we needed? A slap in the back to wake up, right? Yeah. So today I will be talking about building a sustainable business that will outlive you. And I know the poster said I'm sharing about my journey, and it is about my journey. And so I'll be sharing a lot about what lessons have I learned working in a family business and being a second generation entrepreneur. So my father still works in the business. He founded it in 1994. The business is Faida Investment Bank. In case you've never heard about it, it is 100% Kenyan owned. We are licensed and regulated by the Capital Markets Authority. I think we had Victor, who was here on stage in the panel discussion earlier. I don't know if he's stepped out, but he is our regulator, and we are also a member of the Nairobi Securities Exchange. So we have a presence in Rwanda as well, and affiliates in the region. And so we help people raise capital, we help people trade in the stock exchange, we help people invest their money in different opportunities, and the services that we offer are many. So I did mention it in the slides, but he can just sort of flash through it. You know, equity and debt trading, which means if you want to buy stocks, if you want to buy bonds, if you want to raise capital for your business, if you are looking for a valuation because somebody has come and said, we like your business and we want to, you want to kind of know what is my business worth, that's what we do. Fairness opinions and those sorts of things. Mergers and acquisitions, we act as transaction advisors in those sorts of transactions. But I will not go into that. I'm talking about my journey. So I'll ask you to go to the next slide so that I can take you through my journey. So that building that's coming right up is where we sort of spent a lot of our time many years ago. Windsor House is where FIDA had its head office some time back. And when I started working, there's usually a very, very blurry line between relatives when you work together. So my father is the founder, and I've joined the business, and I guess I am the professional that I am. I grew through the ranks, and I remember this one day, I was sitting with some clients, and we were sort of discussing an investment opportunity, and I had a very serious discussion with them, and my phone rings. And so he calls and says in Kikuyu, "Come now." And so, it's dad, so, it's not one of those things you can say, give me a few minutes. So I said, I have clients. He said, okay. So I stood up, I told them, give me a few minutes, went to his office, and he said, I'll speak in English, but he spoke in Kikuyu, and he said, do you see that parking out there on the street? Can you see it? I missed it this morning. It is now open. Here are my car keys. Please go park it for me and then come back. So I don't know whether you know where Windsor House is. It's at the corner of Mwindibingu and University Way. So generally, it's very challenging when you're working in family business because those lines are blurred. And so you have to find a way of professionalizing the business at the same time managing the relationships. But we've somehow over the years managed to sort of do that. One of the things that I want you to do, I want you to just do an exercise. I'm hoping that those of you who are sitting at your table have kind of taken the time to get to know each other. And so I'll ask you a question. If I was to tell you today that you pick one person, and that person can be in this room. If you don't know the people well, you can think about somebody who's out of this room. And I tell you that you will earn 15% of their earnings, of their profit, every year for the rest of your life. Who would you pick? Have you understood the question? The question is, pick one person. They could be in the room or outside. I realize people have moved out. So they could be in the room or outside of the room. And I tell you that you are going to earn 15% of their profit for the rest of the year. Pick one person. Who would you pick? Okay, there's a name, Julian Kula. Another one? Okay. Another one? Okay, why? I heard Joram. Why? Do we have a roving mic? If we have a room, or you can just shout. Why would you pick them? One word or two words? What are some of the qualities that these guys have that have caused you to say their name?
He is such a brilliant mind, so the chance of success is very high.
Okay, brilliance, intelligence. Okay, what else?
Identifying solutions
Okay.
for opportunities.
Identifying solutions for opportunities. Nice.
They're business savvy.
Business savvy. There's one at the back. Business savvy.
They have the right networks.
They have the right networks. I like that. Okay, why else? There's one here. Okay, go ahead.
I'd pick Ken Joroge because of resilience.
Resilience. Very true. Resilience. Go ahead, there's a mic right next to you.
Julian because he has focus.
Focus. Yeah. Focus. So what we sometimes don't realize is our own investments, our own businesses are actually investments. And you've talked about different words, and some of the ones that I had also are integrity, diligence. I think somebody mentioned hard work, accountability. Somebody said intelligence, brilliance, initiative, energy. The question I have for you is, are you that person? Are you that person? If you're an entrepreneur, are you that person that somebody can count on as an investor because they know that if they invest in you, that they're going to benefit by spending their money in you because you offer initiative, energy, integrity, brilliance, and some of the other wonderful things that were said earlier. So these are the things that we need to just sort of ponder, because investing is not about how much you know. It's not about how much you have in your head. It's not an IQ test. Investing is more a character test, because it requires us to stay the path, to be focused, to be hardworking, diligent, and accountable. And so the question is, can you be that person? So these are the 4 things I want to talk about today, based on my journey. And the first thing I'm talking about today is creating systems. We can go there, they were there. Creating systems. And then structures. Because one of the things that, if you listen to Julian Kula, some of the stuff that he's talking about can really fly over your head, especially if you're at that stage of your business where you have one account for everything. Your business account, your personal account, everything is one. So now Julian is talking about billions of dollars and I don't know which one going where. You're wondering, where is he from? So that's where you start. By creating a system and a structure that enables you to separate your personal finances from your business finances. We'll talk about that. And then, how do you manage the finances in your business? I'll just gloss over it from a resource management sort of perspective. And then, what do you do with your profit? So let's start with creating systems for a moment. When I started working at FIDA Investment Bank, one of the things that really frustrated me, which we talked about, is regulation. One of the things that happens in an industry such as ours is that we have rules and regulations, and then we have guidelines, and we have all these different things about how you're supposed to run your business. And it was very frustrating. We have a document called the Conduct of Business. It's part of the CMA Act. And this document sort of stipulates what are the different things that you require to ensure you have in your business. While that document can be frustrating, one of the things that it has helped us do is create systems. And I took that for granted because we have an operations manual, we have an onboarding or client's manual. What do you do when a client comes in? And when I reflected on this and some of the things that we've had to do as a business, I was like, actually, this is good stuff. Every business, if you want to one day take a month of work, 6 months of your business, and just travel and see the world, you have to ensure that you create systems. And what does that look like? It looks like you coming to a place where everything is systemized. People know what they need to do. And a customer experiencing you knows exactly what they need to do. So you walk in, we have a process. There are forms to be filled out. This is how you onboard a client. And that's how then you need to do it for yourself as an entrepreneur. Why? Because there's predictability. A customer knows this is what I expect to get, and the experience is the same when you sign on a customer. And then the owner doesn't have to be present 24 hours a day, or 24/7 available for questions, because when you've hired an employee, they know exactly what needs to be done now, what needs to be done next. In this problem, this is what needs to be done. So for example, you're going through a process of launching a product, and you've documented exactly what process needs to be followed. There's no guesswork. Everybody knows, even if it's an intern who comes, there's a manual they go through. This is what serving a customer looks like. These are the questions that you ask somebody when it comes to risk and their profile and all of that. These are the things that you ask for. And then things get done because there's no confusion, there's predictability and clarity. And somewhat, you can kind of somehow predict results. There's a process that we go through, there's a program we have called Investable. And there's a sales process that we go through, which has a sales funnel. And we kind of have worked out a formula, and we know if you bring 1 million people through the funnel, creating awareness to these people, at the end of the day, you'll end up with probably around 200 signups. And that's a formula we've been able to use in different launches. And you need that for your business. Whenever you're trying to launch anything, it helps. It creates efficiency, so you're not in meetings all the time trying to figure out what do we need to do. There's a clear process, staff know what to do, and you can delegate very, very easily. The other thing is that systems help build trust. And lastly, they help build scalability. If you don't have a system of how you run your business, whether that's IT, if it's IT heavy, whether that's operations, customer service, you need to see what are the key areas of my business that I need to systemize so that then it doesn't need me day to day to be able to do. So how do you create that system? You need to look at how do we operate right now and record that system. How do we run our business at the moment? And you can even sit with somebody, have them record you on audio, and then they can go back and sort of just transcribe that and see, does this work out to what it should be? So, and then document the system, create a process map if possible, and then create a step-by-step process. It sounds like it's a lot of work, but I can tell you that when investors are coming to invest in your business, and if you're looking to scale, and the reason why, for example, Julian Kula was able to move to 28 countries is because they have a system of how they work things. And that's how I've seen with all these large companies, they have systems that work. And so you create a step-by-step manual, and then you train and orient your staff so that they know, okay, this is how things work here. So that was creating a system. Now we're moving to the second thing that we must do. And one of the requirements for us being in this industry is that you have to have different accounts. It's prescribed by the law. You have to have your business account, then you have to have your customer account. And the reason is because we receive money from customers, and that money then is not for us, it's for investing. So I'm basically channeling their money from the customer into an investment. And the regulator says, excuse me, you can't have the same account for running your operations as a business as the ones customers have given you to run your business. And that's applicable for us. Now for you, that would be applicable in as far as ensuring that the money that you have in your business is for your business. So what typically happens? You see that image on the left is where your business, personal finances are commingled. What word comes to mind when you see that left side of that image? What word comes to mind? Confusion. Confusion. Total, utter confusion. But then when you come to this other end, there's a certain peace, with those lines that everything is separate, you can see what's happening. Let's just move to the next slide for a second. This is what a lot of SMEs, startups look like, right? You have your business revenue that comes in, you've collected money from whatever sales you have, and then you have this one bank account. Then you go to Carrefour, you go to LC Waikiki, and then Linton's has had a launch for, Fenty Beauty. You've bought foundation, with the same business account. I'm attacking the ladies here, but it applies to the men as well. Right? And this happens to all of us. When you start a hustle, it tends to happen that you just do, then staff salaries, and then there's kids' school fees that you're paying from the same account. And you can see all those papers. You want to try find and sort out your numbers, your books to be able to report, and it is virtually impossible. Because you are overwhelmed, you can't tell, did I make a profit? I work so hard and I'm not seeing cash. And the reason you're not seeing the cash is because you're not able to see it. Now, when you keep your personal and business finances separate, you actually are able to then keep tabs on what's going on. You're able to know how the business is actually doing. When an investor comes and they want to buy your business and you have no idea and you don't know your numbers, for example, they'll ask you. Typically, when an investor comes, they say, okay, even if it's the bank, they want to know, how did you do last year? What were your revenues? What is your EBITDA? And you just look at them like this, deer in headlights, don't know what to say because you just have no clue. That's a red flag for an investor. And so as an entrepreneur, you need to be able to get into the habit on reviewing your numbers consistently. And then when you keep your personal and business finances separate, you can actually identify where the challenges are. There's a business that we were advising a few weeks ago. They wanted to raise some debt because they were in a huge cash flow challenge. And so we said, okay, can we please we sent them a checklist. These are the things that we need you to provide us with. And we said, okay, give us, because they have many branches, we said, give us your branches performance per branch. What is your revenue per branch? What is your expenses per branch, direct expenses? Then there's the general expenses, so that we can see how the branch is performing. I remember we then ended up writing a report for the entrepreneur and said, you need to close these 4 branches out of the 10 that you have. And this particular entrepreneur was so offended until we said, look, let's just sit down, you look at the numbers. These 4 branches, when you look at the revenue and direct costs, they are bleeding the business. But because they just look at overall numbers, they don't actually know. Now, those branches for you could represent a product. But if you don't spend time looking at those numbers, this thing we're being told to look at Africa and globally to be able to scale, it can't even come into the picture. Now, the other thing that keeping personal and business financial separate does is taxation becomes easier. You know, dealing with carry becomes so much easier. Cash flow management is easier. And then you can create margins and build wealth. So how do you avoid commingling? How do you avoid being in a situation where you're mixing your business and personal finances? So first of all, you start by opening separate bank accounts and really operate them separately, because they could be open. I know you have a personal account here and a business account here. Just operate them separately. Once you have separate accounts, pay yourself a salary. You have to pay yourself a salary. How do you determine? How do you determine how to pay yourself a salary? I've heard people do different things. I think you kind of need to know your business very well. But one of the things that I had heard recommended by Michael Michalowicz, who's the author of Profit First, he said, look at the 3 worst months of your previous year's performance. And then take the performance of those 3 worst months and see what could I have been able to earn as an entrepreneur. And then figure out whether that is a number that you can consistently pay yourself going forward. But pay yourself a salary, and then your expenses come from that salary, your personal expenses, and then have separate debit and credit cards for yourself and for your business, and then keep records. Okay, so then I remember in 2006, we had the Kenyan IPO. I can tell you we had queues of people. All brokers and investment banks had large queues of people lining up to be able to sign up for this particular IPO. An IPO is an initial public offer. They were offering their shares to the public for the very first time. And one of the things, now we're talking about managing finances, one of the things that we didn't do very well at that time is monitor our numbers weekly. Yeah, we now monitor our numbers weekly. I mean, we had great growth. Our revenue numbers were fantastic. You know, we had huge customer numbers. We had queues going all the way around the building. We were still at Windsor House, down the building, run onto Moy Avenue, and we were so proud. I mean, we were signing up accounts. We were doing so well. But by 2008, we were in a cash crunch, and we couldn't understand why. I mean, we couldn't understand it. The cash is there. The accounts show there's cash, but in the bank, we're struggling. You know, even paying salaries became an issue because cash was tight. And only after doing an audit, we discovered that we had lost a significant amount of money in the tens of millions. And that particular experience was so horrible. By the time we're discovering it, we were doing the Safaricom IPO. You know, lots of cash, lots of investors coming in, we're doing very well, but we can't feel it. And this is one of the things that made me realize, my goodness, you can have stuff that you trust, that you can give your children to, but those guys are sometimes not very honest. And so therefore, you cannot rely on your accountants and your admin people to do everything and you have no idea what's going on. Yes, there's an accountant, they went to school, but everybody's about their own interests. Sometimes people face situations. And so even petty cash, something that you kind of just say it's just 50K a month, you can lose a lot of money through some of the loopholes that we have. So you have to track your numbers. Are you tracking your numbers? You know, how often do you analyze your numbers? Do you know how you're performing? What are the ratios in terms of your gross profit margin, your net profit margin? Are your customers paying you? How long or how many days does it take for your customers to pay you? What do your debtors numbers look like? How old are the debtor numbers? Do we look at these numbers? If we don't, we need to pay attention. And then when do you carry out bank reconciliations to check that the money that you received from the customer was actually banked at the end of the day, or that they paid to the correct bank account? And then how long on average do your customers take to pay? I think I did mention that. So with regard to managing finances, sometimes these accounts that we come up with, you know, your profit and loss statements, balance sheets, cash flow statements, a lot of us do them just for carry, for statutory reasons. And really, to be honest, they are for us, the entrepreneurs, the business owners, the people in the business. And the reason you have these numbers is just so that you know what is the state of my business. And when you get these numbers, it's not just to see, oh, okay, we did 5 million, okay, we did 25 million. It's to also check, how did we do this quarter versus last quarter? What's happening? What were our projections? Did we meet what we were expecting to do, or did we fail to reach what we were expecting? And then based on that, then you're able to then make sure that you're also checking that we have sufficient resources for the expansion. A lot of times, many business people make a decision, we're going to get into this business, or we're going to start this product, or we're going to launch this or the other, without any clue about the numbers. If your numbers say no, you don't move. Because you can move and then end up in a mess. And then when you are able to see these numbers, you're basically able to exercise good management, you're able to be efficient and effective in the way that you manage your business. Because if we don't, then growing and scaling becomes a huge challenge. And attracting investors to our businesses, whether that's the bank who's giving you a loan, a SACCO giving you a loan, you know, anybody else giving you a loan, becomes a huge challenge because you're not able to be clear with the numbers that you have. Okay, so then I guess lastly, which I want to spend a little time on, I don't know how much more time I have. Okay, I want to spend a little time here, and the question then we're asking is, fine, I have my revenues, I have been able to make a profit. What do I do with that profit? What are some of the things that you do with your profits? Maybe I can just hear from you for a second. What do you do with your profits? Can we have the roving mic go round once more?
Reinvest in the business.
Okay, reinvest in the business. What else? Does anybody do anything else with the profit they earn? There's somebody there. Some people cool it.
Improve lifestyle.
Improve lifestyle. That's very true. What else do we do with our profit? There's somebody, there are a couple of people on that side. Steph, yeah.
I would use it to test on new products and research.
Okay, R&D, research and development to see what other products. So that's really reinvesting back into the business. Oh. There's one over there at the back. Wow.
Invest in your employees.
So increasing their salaries?
What exactly? Improving their skills.
Okay, so through training and that sort of thing, improving their skills. Okay, so what typically happens with, generally with investing? Let me just step back a little bit and look at you as the individual. If your business is the only investment that you have, then you're putting yourself at a huge amount of risk. And so I want to suggest to you that you have to diversify a little bit from your business. So what typically happens with most entrepreneurs, you will make a profit and most of it, after you've enjoyed, will go back into the business. But it's also important to do other things with the money that you invest. So first of all, you have to put money aside and build reserves for tough times. Building reserves is very critical. The same way we are told as people and as individuals, we have to build emergency funds. Even your business needs an emergency fund because revenues are inconsistent. This month you're making $1 million, the next month you're making 30 million, the next month, sometimes things happen that you can't even explain. Maybe you've been making 20, 100 million a year, and then suddenly a month comes around and you make 1 million because COVID has come, or now it's monkeypox and it has come to Africa. I don't know, whatever it is that causes all these challenges. And so because of the inconsistencies of revenue and the fact that our expenses are consistent, we must build reserves. And when you build reserves, then you create for yourself what we call your own personal line of credit. Because what tends to happen? You go to the bank or to the SACCO and tell them you want an overdraft. And so you have this approved overdraft line that you keep going to whenever you need money. But when you have your own cash reserves, then you create for yourself your own credit line without having to go to the bank and draw down and having to pay interest each time. So that's one of the ways that you can do it, so that then cash doesn't then get extremely tight. This business I was telling you about earlier, no reserves whatsoever, the one that we were helping to get capital. In fact, it was so bad that the entrepreneur had borrowed for the business, used all the collateral that they could to borrow for the business, and then went in and borrowed their got personal loans to then put into the business. That's a situation you kind of don't want to get into. And that happens when you're not keeping tabs with the numbers and knowing what's going on. So create your own line of credit by building cash reserves. Then, one of the things that cash reserves does is that it's not just only for emergencies for the business, but you might find opportunities. I heard somebody mentioning the fact that you can use your profits to fund research and development. Maybe an idea comes and you want to be able to see, how can I go through with this? We need to invest in technology. Then you can go ahead and use those cash reserves for that. The second thing I want you to use your profits for is to buy assets. To buy assets. And why are we buying assets? Really, when you think about the business, you build wealth by buying assets, whether that's with a business or with your own finances. And assets will act as collateral. I remember when, years back, we bought a building as the business. And we had a building and we're receiving rental income every month. And I can tell you it saved us a huge amount of money because we got into a cash situation around about the 2008, 2009 time, and we ended up having to sell the building. But if we did not have that building, I don't know where we would be today. And so it helps. And I'm not saying it has to be a building. It can be any asset that is easily sellable. So we've got fantastic opportunities these days, such as treasury bonds, and I'll explain what those are. You can get into real estate, you can invest in treasury bills. There's money market funds that you can put your money in if you don't want to lock your money for a long time. But there's opportunities for us as entrepreneurs to build assets and build reserves with the profits that we have. Now, it's important that that money is put in cash and cash-like assets, especially when you're growing it. Because, as we've seen, it's important for emergencies, but also important for liquidity. Because opportunities come. I mean, if you saw what Julian was talking about with all these different companies that are coming about, I remember one of them came to us. And this was actually early in 2021. And this business approached us and told us that they've come up with a certain app that would enable customers to access US equity markets. Basically, enable Kenyans to buy stocks, ETFs from the US and to trade in the comfort of their mobile phone. Enable them to use M-Pesa, without having to go to any bank and sign up with anybody. You can open your account on your phone, and they wanted to partner with us to be able to do this. And we accepted and we partnered. But when we saw how agile and how innovative these guys were, we actually decided perhaps we can invest some money in this startup that is a lot more brilliant than we are in being able to access some opportunities that we're not as nimble as they are in being able to access them. But they needed the cash within a week because they were closing their round for the raise. Now, if we didn't have reserves, we would have had to borrow, which doesn't even make sense because it's a risky opportunity. So you need to have reserves for opportunities and for liquidity. Now, I don't know how many of you, I'm sure these days there's all this information on the internet and everywhere, and I'm sure all of you have had experiences with investing in money market funds, but I would encourage you, if you don't have a money market fund for your business, open one for your business and save there. So some of the accounts that you might decide to have is a business account for tax. Instead of paying that 1% tax, you can decide, let me pay at the end of the year so that I can pass my expenses. But instead of waiting to the end of the year to know and guess and see from your numbers, oh my gosh, this is the tax I have to pay, estimate what's the kind of tax you're likely to pay per month given your revenues, and then sweep that money into a money market fund. As you're building that money, it's earning an interest, and at the end of that period of time, you will have an interest that you've earned. You know, you could also have a certain amount of money reserved to be able to pay dividends to the business owners. And so you can sweep that money into a money market fund to be able to reserve it until the time comes. So money market funds are really awesome to use because they're simple, they're easy to access. If you want the money, you just give them 2 to 3 days notice and you have the money available to you. Very accessible, and you earn a good rate. If you open a bank account, it's great, but you're probably running a current account as a business and you earn 0. In fact, you pay the bank to hold your money there. But it's convenient because it's a transactional account. But with a money market fund, you're earning 8 to 9% per annum, where in the bank, you'd probably earn something like 3-4% per annum. So, and then it compounds monthly. So I highly, highly encourage it. The other place that is very easy for you to invest in, doesn't take a lot, and you can do it incidentally for money market funds, even for businesses, the minimum ranges between 2,000 and 5,000 shillings. It's not much. So for fixed income investments, that's another area that is a low-hanging fruit. Low-hanging fruit. Today, there's a bond available by the Treasury, by the government of Kenya. Central Bank of Kenya is raising capital for the government to build infrastructure, giving us opportunities to be able to invest. And the current bond is likely to be sold for about 13% per annum, tax-free. And the minimum investment amount is 100,000 shillings. I mean, you can decide, you know what? Let me put, how much profit did I earn last year? Let me put 200,000 in the bond. Let me put 1 million. I don't know what profits that you made. But I mean, when you look at the real estate earnings, if you do your yield and you're looking at real estate, maybe you have a house in Nyayo Mbakasi, maybe costs 7.5 million shillings and you're getting rent of 35,000 shillings. When you look at the return on that sort of investment, it's very low. Probably at the most, you probably get 6%. Here I'm talking about guaranteed return, 13% per annum. You will not be told there's no tenant, the roof is leaking. It is guaranteed return. So as an entrepreneur, when you have a business, I would encourage you to highly consider sweeping some of that money that you have in excess into a treasury bond or a treasury bill. Treasury bills are short-term. They also are issued by the government. They're short-term, 3 months, 6 months, 12 months. And then, of course, the rate is lower than the 13% I just mentioned, depending on the period of time you're investing for. And then the government bonds are longer, usually 2 years to 30 years, depending on the bond that has been issued. Treasury bonds are issued monthly. Treasury bills are issued every week by the government. All you need to do is open an account with the Central Bank of Kenya and you'll be able to invest in them. And we're happy to have a conversation around how can you then set up these accounts, whether it's a money market fund account, whether it's a treasury bill that you want to buy or a treasury bond that you want to invest in. But guys, it's important to be able to ensure that we don't have all our money concentrated in our businesses. In fact, there's usually a certain way that you have to split your investments as an individual. And you have to look at creating a safety net for yourself. In fact, if you drew a triangle, at the bottom part, you remember Maslow's hierarchy of needs. At the bottom part of that triangle is your safety net, your basic needs. You want to make sure that your basic needs are catered for your foreseeable future, that you don't want to struggle paying rent or paying power and water and those sorts of things. And so you have to invest in those things and creating buffers as an individual for that. But then next level, you want to make sure that you're able to sustain your current standard of living. So that even if your business is not doing very well, you're investing to make sure that you have returns coming back that are able to beat inflation to enable you to afford the lifestyle that you have. Now, the business that you run is probably next level in terms of self-actualization, because the business can give you 100% return in a year. It can do amazing things for you. And the higher you go up that triangle that I've just described, the higher the risk. Your business is in the highest risk. And so even as you have your business, make sure that you've taken care of your safety net, you have those sorts of things that will ensure that you can manage your basic needs if business doesn't go very well, and then you're able to also invest in other things other than your business. I think it's something that entrepreneurs struggle with a little bit, where you concentrate all your resources in the business and forget to diversify. So I thought I'd just leave you with that, and I want to now open up to Q&A, so that then if there's any questions that anybody has, we're able to address them.
Thank you, Rina, for great insights there. I've had several takeouts. The first one being we need to get organized, the systems and structures, and as entrepreneurs we have so much that we have to handle at the same time. And while we are getting organized, we are becoming attractive to investors, because when we don't look organized, those are red flags there. Then thirdly, we need to separate our finances, manage our money, separating business finances and personal finances. And there's a question I always like to ask, because I am also in the space of finance. How many of us pay ourselves a salary? Hands up. How many of us pay ourselves a salary? Oh, his hand is up. 1, 2, I can see like a quarter, even less a quarter. All right. Okay. So the rest of us, we are able to pay our rent. We are able to take our children to school. We are able to feed ourselves. And we are able to take care of our bills. How do we do that if we are not paying ourselves a salary? You said something.
We just get money from our businesses and pay the bills.
So, what is the difference between getting money from the business to pay your bills and paying yourself a salary? It's just that the latter it's not organized, it's not structured. So you're really paying yourself a salary, right? So it's good to think, if you think about it in that manner, and what is your budget, you see, and come up with a figure, because there's a figure. Because when that does not happen, there's no such a structure, there are months that you will overpay yourself. There are months, you'll just be able to work with what is the bare minimum. So you are all paying yourselves as salaries, right?
Say that again, please. I missed that last one.
They are paying themselves salaries. It's just that it's not structured. Yeah, to some extent. All right. So lastly, how are we going to grow our money? The money market fund and the fixed investment income. So great insights. Thanks, Rina, for that. So my name is Stephanie Nguku. I am the investor readiness expert at the Sandbox, and we work with startups and SMEs in helping them to package their businesses and promote them for investment. How many of us in the room are looking for capital to grow their businesses? How many? Okay. How long have you been looking for capital? How long have you been asking?
Around a year now. 1 year.
Have you been talking to anyone?
Well, mostly my banker and my another fintech I'm working with as well.
What do they say? Are they
Not really.
Why? What are they saying?
It's too early. Yeah. They are yet to really understand the business model.
They are yet to understand the business model. And pretty much what we do on investor readiness is trying to identify the gaps which are the bottlenecks standing between you and accessing finance. So what we do is that we help address those gaps and be able to promote your businesses for investment. That's a conversation we can have at the back right there. So to continue with the conversation, we are going to take questions from Rina based on what she has shared with us. And anything around capital, Rina is very rounded, from managing finances to running a business to raising capital. So we can have all those questions for Rina. If you have a question, kindly raise your hand, then the mic, I'll bring the mic to you.
Thank you very much. My question is to do with what do you do with your profit, the profit that I make from the business? And one of the things that you mentioned is about investing, say, in T-bills or government bonds. So then when I'm investing in that as a business, then do I invest like with a business name, or do I invest like, say I'm Frida, so Frida investing in bonds, I have done business, I have made profit, I want to invest it. So do I go as Frida, or do I go as the business? Which is the best route to take in regards to that?
So I'm assuming Frida has received her pay and maybe her dividends. So what I'm suggesting is with the profit is to invest as the business, because you're also growing your balance sheet as a business. When you're going to look for a financier, for example, one of the things they look at is the balance sheet. What assets do you have as a business? And those assets don't necessarily have to be vehicles and buildings, but if you have cash, in those sorts of places, then it makes the business quite attractive also. And you're also able to, so like for example, if you have a bond, you can get 90% of the value of the bond from a bank. If you have if you want to borrow against that loan, you can actually do that, and it's the best collateral they would take. They give the highest, and I think even SACCOs can give 100% of the bond as collateral. Yeah.
Hi, Rina. Thanks for the presentation. Just mention a bit about family business, how you're handling the, let's say, dividends. For example, there are some family members who are working in the business, and others are probably shareholders. So, like you being second generation, how is your pay determined, your bonus, versus someone who is a shareholder? Because I think a lot of the money issues come from the family side, not from the just creating the system.
Do you have another question? Or
that's it.
Okay. That's a very hot one. It's a very tricky one when it comes to family business. So for now, what we've done is, for now, the salary is determined based on, performance, so there's a structure that is determined for everybody in the business. Now, for those who are in the family and are not in the business, they benefit from my father's shares. So he's created a company, and then where the siblings, my mom, are all part and parcel of that business. So any dividends that they earn would be earned from that business, and not just because they're shareholders, because they're not directly shareholders is what I would say. But for me, because I work in the business day to day, and I run operations in the business, then it's a different compensation because of the fact that I work there. But it's a continuous conversation, and it's so key because it gets very, very sensitive later on. And succession is something that has to be talked about consistently, continually, among the family so that people know what am I expecting, if anything. Why is this person getting this or the other? And it's a conversation that we continue to have. But for now, that's the structure. So dividends are paid to shareholders when there's dividends that are available, and then salaries paid for work done. And bonuses are based on performance, not because I'm a shareholder, it's based on performance. Yeah. I tend to be, I'm currently in a unique situation because none of my siblings are interested in the kind of work we do. My brother is in the hotel business, my sister is in the medical field. So, yeah, it's not an issue at the moment. You have another question?
Sorry, just to add, I think part of the tricky bit, as in they are shareholders, they can't fire you. I don't know if you're getting my... If it was another employee, if the performance is not good, they can fire you. But...
I disagree. Because I have dual roles. So I can't be fired by the board if I don't perform.
Okay.
Yeah.
I think that's the tricky bit. Because you have to sit at the same dinner table later.
Yeah, we can take it aside.
Okay.
Yeah.
Hi, Rina.
Hi.
Good evening. My name is Julian, the other Julian, female. My question is on cryptocurrency and its adoption in Kenya. I just wanted to pick your brain because I recently procured a service and they accepted crypto. And I've not been very keen on getting, I feel like it's a risky venture. Perhaps I'm the last one to onboard, but I just want to pick your brain and find out what you feel about it. Have you onboarded personally and as a business, and where do you see its future in Kenya? Thank you.
Okay. So as a business, no, we haven't invested in crypto and we don't offer crypto as an investment opportunity yet. I still feel crypto is in its very early stages. However, as a personal, in my personal capacity, I have invested in crypto, in all kinds of things, but it's because I have a side of me that is highly risky. For anybody considering crypto, my suggestion is just understand what it is that you're investing in. Take time to understand blockchain and how it works and the technology that it is, because it has so many use cases, and it makes a lot of sense. However, as you invest in some of these things, invest a certain percentage of your assets that's not going to, break the bank or cause you to have sleepless nights. So if you can invest, say, 5% of your assets in crypto and you have the stomach for it, why not? But just knowing that you could potentially lose everything. But it's always nice to kind of dabble in something to understand it, because until you invest in something that you're trying to understand, you really don't quite understand it. But you have to take the time to first understand the technology and how crypto comes about, and then try and invest in crypto that is more, what can I say? These ones that have been around longer, your Bitcoins, Ethereums, those types that are not very new, unless, of course, you understand the business behind the cryptocurrency. Yeah.
Hi, Rina, how are you?
Hi, good, thanks.
Thank you for the presentation. I had two questions. One is on alternative investments, because I think for many years we're all getting the same thing. We're getting stocks, we're getting bonds, we're getting typically the same thing. And now look at the real estate market, completely overcrowded. NSE has more or less sunk because all the foreign investors have left. What are you offering in terms of things like gold? And I don't mean gold traded futures, but actually gold. And even commodities. What are you offering in terms of commodities? What's been the diversification of investment opportunities so that people can put their money in also? You can have a portfolio, low risk, medium risk, high risk. And then number two is this, I'm glad you're second generation. Most businesses actually lose out. We work so hard to build businesses which end up collapsing. I think we've all seen publicly how many companies have collapsed in the hands of the second generation and the third generation. And what are investment banks like you doing, or are you interested in that particular sector to kind of transition families so that they don't lose so much money? We've seen the collapse of major retailers the last few years, and it's very sad because a lot of value that has gotten lost between one generation and the next generation. So question is alternative investments. Second is succession and probably succession advisory or consultancy.
I'll start with your first one. It was an easier one. So with alternative investments, you can get all of those. We have available gold. In Kenya, you can buy gold through buying the gold ETF that's listed on the stock exchange. And so what happens is that this an ETF is an exchange-traded fund. And what exchange-traded funds do is that they track the price of an underlying asset. And so because it's difficult to access the markets generally and buy gold in bullions in Kenya, ABSA listed an ETF, an exchange-traded fund tracking gold. And so it's available. You buy it in the stock exchange. Minimum units is 100 units for each shareholder or each purchase. And you have access to those. Commodities like oil and other commodities are available. Actually, commodities and precious metals are available through brokers such as EGM Securities. And we've partnered with these guys to be able to offer our clients these options as well. So if you want to trade in foreign currencies, you want to trade in oil, you want to take positions in some of these derivatives, you can do that. You want to trade in Facebook or Tesla or an ETF tracking the S&P 500, you can do that today through your app. In fact, if you just open your phone and download HISA app, you can access any stock in the US. So there are alternative opportunities that are available other than the stock exchange, stocks listed on the stock exchange. Other than real estate, we do offer those as well. The only thing we don't do is real estate. We don't advise or help people invest in real estate. The second question was around what are we doing to transition families? I think each business is different. I can't speak for anyone else. I can only tell you what we've done so far. And what we've done, or rather what my father has done, is hedge everything on me. He was lucky, I was interested, but he's been very clever about making sure that my siblings are protected. So it's not that because I'm working in the business, I get everything. It doesn't work that way. I mean, he's made sure that he sets it up in such a way that my siblings will also benefit from the business. They are not interested in running the business. They're running their own things. And in which case, if they ever wanted to come in, then they would come in as a board capacity. So I think for us, the key thing is professionalism and just making sure we have the right people doing the right things. So for example, I can decide I want to be a bond dealer today. I was once, but I'm the worst person to be a bond dealer. And so we have experts who are bond dealers earning way more than I am, but because they're experts doing that work, that's what they're hired to do. And so for me, I will concentrate on the things that I'm an expert in. I'm not the MD, but I'm a shareholder. I am head of operations. I'm the director of operations, and we have an MD, and we have a clear way of understanding that these are the business sections he manages because he's good at those things, and I manage these other things. And it's an ongoing process and conversation to ensure that the business is run professionally, because it's really about the business doing well and moving to the next level. The moment I'm making decisions that are not aligned with the company growth and opportunity for the company to do well, then, I mean, there's no reason why I can't be asked to step aside. There's really no reason why. So I think that I clearly understand, and I wouldn't want to do anything to jeopardize the business. I hope I've answered your question. Not really.
I'll talk to you later.
Okay.
Hi, Rina.
Hi.
Thank you for the wonderful presentation. I have two questions.
Okay.
So one pertains to the board. At what point does a business need a board? How important is that in terms of structures? Is it that if you're a micro enterprise, you don't need a board, or do you always have to have a board for decision-making purposes and for posterity? And then the second question is, how do you deal with conflict in a family business? I know it's been broached on, but just wondering if there are any mechanisms that you can recommend.
Okay. So I think accountability is very important. I honestly believe that without accountability, then it becomes difficult for you to perform to the best of your ability. It's like when you have an accountability partner, you want to exercise and you want to be better at, you want to read 12 books this year, or you have certain goals. The moment you have accountability partners, it sort of pushes you to do what it is that you want to do, and even better. So I think that's the role of a board for an SME. Now, for a small business, you don't need to get into the stage where you're getting a formal board of directors, because then it can get costly. So my advice would be to start off with an advisory board. 3 people that you admire and respect, who are experts in areas that you're not an expert in, who will sit down around the table and ask you hard questions. And with that, then you're able to then make sure that you're putting your numbers together, you're sitting down with them and explaining to them what your goals are for this year. It creates such accountability that you'll find that you're literally moving from one level to the next. The sooner you can get that done, the better for you. Now, when it comes to this other board, it can get complicated. So you kind of need to get to the stage where in the business where you're able to afford to, pay to have board members sit on your board, and then you're able to get expertise in areas that you don't have internally. So like legal expertise, tax expertise, HR expertise that maybe you don't have internally. And you could start with just 3 board members to start off with and grow that eventually as your business grows. Yeah.
And the conflict?
Oh yes, so there's conflict in family business. So conflict comes from lack of understanding, misunderstanding one another, and lack of communicating. So I think if you're working in the business as a family, then it's important to have frequent meetings together to understand what's happening, what's going on, my expectations were this, how come this is not happening? The more that you're communicating, the more that you're reporting, the more that you're working through things, the better. I find that when you haven't had an opportunity to talk things through and work things through by having those conversations and reports and looking at where things are at, then assumptions are made and suspicions are held. And so it's best when you can have a structured way of meeting. So if it's once a month, perhaps, you have meetings and it's business meetings and you're reporting on certain key areas. So for us, other than my dad and I, we don't have any other family member on the board. So on the board, we meet quarterly, and then with the shareholders, we include the other family members, we meet once a year. And so we report, and they ask questions, and they're free to ask questions even during the year, which we're able to then respond to. But for us, like with, my father and I, we meet like literally weekly, sometimes daily, over certain issues so that we thrash through them. And of course there's conflict, but we resolve it immediately. I asked you to do this, why isn't it done? You didn't reply to this email, what's going on? I've seen you delaying on sort of this or the other. And so then we're able to, okay, the reason is this, and we talk about it. The moment that communication is not flowing freely, then things fester, and then it can cause a lot of problems. So it's just keep the conversations going and make it structured. So if you can meet every so often, such as once a month, I would highly recommend it. Yeah.
Thank you, Rina, for all the responses. Our time is almost up.
Okay.
So you have shared about investing and managing our finances. What solutions does MoneyWise have for us in the room? I know you have the investable platform. How can one go about utilizing that? What is there to learn?
Okay.
Yes. And your book, you can also talk about
okay.
it. Yes.
Okay. Mm-hmm. So we have the book. It's right there on your way out on the right table. I think Betty is there. You can just wave. The book is available. It's 1,000 shillings. We also have an online program. The online program is called Investable. And it basically takes one through the process of thinking through investing. How do you decide what investment options are available, are for me? We explain the different opportunities that are available, how they work, red flags to watch out for, how to access them. And we sort of take you through a 5 to 6 week program, after which it is really self-paced. So you can join with us in the 6 weeks. It's actually 5 weeks we go through each of the weeks going through different modules. But you get a lifetime access to the program. And the program goes through the different investment opportunities, how they work, and how to create an investment plan that is aligned with your values and your goals. The other thing we do is training programs. So, I mean, with corporates. So some corporates will call us in and ask us to do trainings for them, as well as one-on-one coaching. But that one is very, because of time, is not something that I usually shout out about. But the investable program is a fantastic program that I'd encourage you to check out. It's available online. We partnered with a company called Africa's Pocket to be able to offer that program. Yeah.
Awesome. Parting shot?
Parting shot is, I think I really admire founders and entrepreneurs. I think you guys are amazing, amazing humans that God has placed a seed in your hearts. I think you can do and be anything. When I look at the different encounters I've had with so many different entrepreneurs who we interact with on a day-to-day basis, I am just amazed at some of the things that they do. But I think one of the things I've found consistent through these guys is the fact that they are such good managers. You know, the question I started with in the beginning, they're accountable, they know their numbers, they know their business so well, they know the details that they need to know. So they're accountable, they're people of integrity, they're people who, you know, just sort of know who they are, and they're people who are comfortable in what that they do. The other thing I found consistent with them is the fact that they are good managers of the finances that they're given. So when I find people who don't know what the numbers are, can't remember, somebody else is handling, those ones struggle a bit. But those who know their numbers really do well. And so I know that sometimes some of us are in the creative space and numbers are not our thing, but make numbers your thing. Understand the numbers because they tell the story and they will help you make decisions where your investments are concerned or your business is concerned. Thank you so much, Stephanie, and to the Sandbox team for organizing this session and this 2-day Baraza. I think it's brilliant. We're learning so much from all of each other. It's fantastic. And thank you for the opportunity to have this conversation with you today. In case there's somebody who wants to see me on the side because there's a question they couldn't quite ask, I'm still around. Feel free to ask me. Thank you.